You know, it's boring to say, I think, but I'm really more focused on the euro and the yen than anything overly exotic. And I think that there's going to be two different ways that those play out. But my view is you probably want to trade the dollar strong trade against the euro. In the run-up to the European parliamentary elections in May, I think we could see some euro weakness. You know, my personal view is we can get down into the one, you know, sort of 115, 118 level, and that's from, you know, kind of the high 130s. Which I think is a pretty aggressive move and probably non-consensus. The technical setup in that market is slightly long of euro right now and maybe a little bit short dollars, which could add some fuel to the fire. The other one is dollar yen. Dollar yen's had a pretty aggressive move up. I think we can go higher, but I think we're going to have to unwind some of the long dollar yen position first. So to me, that's going to be a little bit of a two-way trade from this kind of 103, 104 level. But personally, I favor up towards 115, 120 towards mid to late 2014. And again, the background for that is just like I mentioned, that, you know, we're going to see some semblance of tighter policy out of the United States. And I think we're going to see sort of maintaining and easing bias or general, you know, ample liquidity in Japan.
How about emerging market currencies? They took it on the chin against the dollar in 2013. What are your expectations in EM?
Yeah, so in emerging markets, without going into any particular currency pair, I think in general the trend is going to be dollar higher. So I think you saw big flows into some of these emerging market currencies and economies in a search for yield. And if we start to see yields normalize in the U.S., i.e. rates back up a little bit, there's less of a reason to go to some of these more exotic spots and to play around in the emerging currencies. It's just they're not as attractive on a yield basis if you can get that in a more stable economy. And if the U.S. yields start to back up, I just think you'll start to see, number one, a reluctance to go into those economies in the first place, searching for yield, and number two, any money that's already in there looking for yield coming out.